What's up YouTube, it's Louis here. Hope you're well. I hope you had a great New Year's. Let's smash this year together. If you're new around this channel, then please do subscribe. You know already, like and comment to help the algorithm. Thank you guys for tuning in. Let's dive into this Bitcoin update. We were saying ever since losing this low that any pump over here over the month of November, we were saying the whole month of November, this is reaccumulating to pump, but pumping into key resistances where we were once holding support for 5 months. We lost, and so anytime that we pump towards this, we should expect a rejection here. As we were holding this level as support, it was the bottom of the market for 5 months. We should expect that, yeah, anytime we pump into this, it's going to act as resistance. So what I was able to do for you guys with the FTX capitulation was measure it from the top of the move to the bottom right there when we initially bottomed out. Of course, we went down a little bit lower, so we'll take that into consideration. And you can actually see that we have this golden pocket around here, the 0.5 and the 0.618. For me, I like to make it orange or yellow just so it sticks out. I know that this is where we should get pulled towards like a magnet. After such a large dump, we should reaccumulate, but this is a bull trap, remember that. And this was your signal right here. If you remember a couple days back on the 20 EMA, when you get above the 20 EMA, it's a good signal because it's a signal that we're going to try and start this uptrend. We're going to try and continue these high highs and follow this 20 EMA and the 55. If we can get above the 55 as well, as long as we hold above both, just as you're doing it under. You see how we're going under and just remaining below both of these, so we should just continue down. When you get above the 20, we're looking like we're going to try to start heading back up essentially. So if we're looking to the left, we see our high of the range over here. The first ever time we touched this 5-month support as resistance. And I told you guys back there, if you remember, that we were going to dump from here. Anyways, the 20 EMA climbing back above it is a signal. Let's attack this. Let's get above this high. Let's try and get up there. But our golden pocket was saying there's a brick wall between that wick and the 0.618. We can see that wick is very close to the 0.50 and this red line, that red line being this low over here, support, resistance, and again resistance. So if we were holding support here, and in the future, if we lose this and we're coming back in around this area and we're seeing wicks going upwards, you know, the opposite here, they're going down, now they're going up, it's just a signal. We just flip this upside down. Instead of it being support, it's now resistance. We should continue lower. We started reaccumulating back down here, and I was just making you guys aware that if we were to pump above the 20 EMA, somewhere around here, then I don't believe that we're going to take this out. I just believe that we could pump to the 55 daily EMA, and we'll go into this in a bit more detail right now. But again, make sure you guys are smashing that like button and of course commenting on these videos down below. Yeah. So continuing here, when we had this fake out, because as you see with this candle, we were actually above the 55 during the day. But before this daily candle closed, you can see we had this big wick rejection off the golden pocket. It means that the fib retracement is done. I'll just draw it out. So we had the capitulation with the FTX. Yeah. And then we reaccumulated. So we ran into the golden pocket, our fib retracement is done. Now let's continue on with the trend. So it means that eventually we should just continue low. We should be expecting around 13.8, 14K. We'll get into that right now. Let me just delete this. So you can see after getting above the 55 and going back under and losing the 55 and the 20, you need to now confirm it as resistance, which when you were down here, you had not done so. So we caught some support over here and we've just put a trend line through it. And you can see now we started heading back towards the 20 over there. So we did not manage to get above the 20. So we just expect continuation down. But we just drew this uptrending red line, which is now serving as a neckline of this head and shoulders pattern. We've got a shoulder right here. We've got a massive head over here. This is your whole head and this is your right shoulder. So what we need to see is a loss of this. If you're not losing this, we're not going down. So although this is a bearish pattern, you must lose the red line, and that would be a daily candle close below this red line. It's ascending, so the price is going to change. But if it were to happen today, you need to see Bitcoin closing below 16,570 if you think that this pattern is going to play out. As long as we're above that price, which again, As long as you're above this red line, that's not happening, the bearish scenario. But I can get you a technical target. As we are in a longer term downtrend, I'm going to use the aggressive target. A more conservative target would be this. You can decide which one. I'm just going to put the more aggressive one. That would give you a target of 15.2k. But the more, but the more aggressive target, just to the wick, from the wick to the neckline, put it on the breakdown, wherever that happens. Again, as it's ascending, the longer it takes to break down, the higher the target becomes. So you can see that in and around 14.8 to 15.2k would be our target essentially. So, and in between those two, exactly 14.8 and 15.2, if you just split in half, we've got 15k, and that's a psychological level. So a level that we would expect to act as support, at least in the short term, this 15k psychological level here. We do, however, see potentially a double bottom form. You can say that this is a horizontal neckline and this is an ascending support. So that would be something we call an ascending triangle on the channel. You can even argue with this head and shoulders neckline, if we just put a horizontal line through here, we've got an even larger ascending triangle. So there could be some bullish patterns upon the horizon, but again, we know how do we validate these patterns. Also remembering, in a downtrend, are bullish patterns really that reliable when we're in such a long-term downtrend? How many times have you seen W patterns failing? So this is something that we need to take in consideration when you want to trade against the trend. Okay, guys, so this is why, me personally, we should be looking for shorts, and that's signs of weaknesses. So the perfect one would have been right there, and luckily enough, I was able to tell you this is a shooting star. This is your sell signal back down to at least this demand zone over here. This will act as support in the short term. And of course, we found our support on this ascending line over here. So if we are forming this short-term double bottom, again, where is our resistance? The 55. So I would not expect us to go through this. I'm just expecting a retest, and this is on the daily time frame, for us to eventually go back down to this support. Again, this is support. So until we're losing this, we might be just bouncing around in between these EMAs. So I want a clear picture. I want to see a clear break above this on the daily time frame, or a clear break below this support on the daily time frame. Until then, we're just trapped between the two. This is your support, so our expectation is a daily candle close above this 20 daily EMA here and this horizontal neckline. Then we will continue to the 55. This is not something that I would be personally trading, because again, this is the resistance. Well, personally, I believe from here we will eventually go lower, but we could get trapped here and go sideways. Let's just wait for that clear break of structure and react, rather than trying to be biased and say, oh, it's only going up, gets up then and it dumps, or it's only going down and it's going up to here. So that's why we don't want to short right now, because there's no loss of this red line, and we don't want to buy until it's clearly above the 55. Not really for me. I wouldn't be doing that personally, because again, you got a resistance here, you got the golden pocket up here, and remember, as we said earlier in the video, with such a big event, that's a big push down. You retrace to the golden pocket, amazing. What's also interesting, at this golden pocket, it was also a 5-month support. So we now just flipped it into resistance. We cannot just expect us to, reclaim it lovey-dovey. I wish it was like that. And everyone's like, oh, it's the new year, things are going to turn around. Honestly, it's just a date. It's just another number. What's different from today and 2 weeks ago? Nothing has really changed. So the year changing doesn't mean anything. We've lost a 5-month long support. We flipped into resistance. The expectation is this is a fib retracement, push, exhaust, continuation. Next target 14k, with potentially even lower, going down to 10.8, 11, 12k. Thank you guys for tuning in. I'll catch you guys tomorrow. If you're interested in the education, head over to my Twitter. It's all linked down below, and you can private message me there. Cheers.